So can I ask you, given your role at PwC and the work that you do, accurate reporting, accurate company reporting is so important. What are we seeing now, and how is it going forward in what you're seeing at the moment?
So I think we haven't seen a whole lot in the annual reports that have come out, just because there's been all this happened kind of before the year end, or kind of after the year end, I mean. And so the question is, what's going to happen with the quarterly reports? And also I think with our trading statements and the RNSs that are coming out, there are quite a few companies that are putting out information about how they're changing their pay structures and how they're dealing with some of the supply chain issues or whatever it might be. But those are all clearly price sensitive information. They have to disclose that as it happens. In terms of quarterly reporting, it's not required anymore, so we don't know how many companies will actually put out quarterly reports. But whether they do or not, if they have, if coronavirus is affecting their business, then they have to disclose something about that to the markets. And I don't think there's any company, even those that are being positively impacted, that couldn't say, or that could say that they're not being impacted. The main issues from a reporting perspective, I think we could probably expect to see are clearly dividends is a huge issue and getting a lot of attention. The treatment of company employees is another area that companies are really looking at, and people are scrutinizing heavily. I mentioned pay already, that whether companies are able to kind of balance bonus structures with their ability to pay dividends, or how it affects government support that they may be getting or trying to get. The issue of government support is one that we haven't really had seen a lot of, except in certain industries as it comes up when they get affected. But now it's affecting far more companies, and it's far more pervasive than it ever has been in recent times. This is something I think that we should probably look at how companies are accounting for it, what it means in terms of how long it's going to last, how they're dealing with some of the restrictions that might be put in place on it, depending on where they are in the world, because some companies some countries are putting restrictions on it. For example, if you have tax havens, or if you are making dividend payments or share buybacks, governments are saying you can't get it. So I think it depends on the company structure. Specifically from an accounting perspective, I think the judgments and estimates that companies have, because obviously financial statements are full of estimates, and there are a lot of questions that companies have at the moment about how are they meant to come up with these estimates and some of the projections that they have in their financial statements. It's difficult to do, but the disclosures around these assumptions are going to be really, really, really important. And I think what's going to be probably a bit unsettling, I suppose, for the companies and also for investors and analysts is the way that these assumptions are going to change over time as new information comes out, which it seems to be happening daily, and they'll be refined and updated accordingly. So I think that you might end up seeing some volatility in the financial statements as a result of that. So the explanations by the companies about why that's happening is going to be really important. And then the final thing I would add on the accounting side of it is on non-GAAP reporting, because there's a lot of flexibility in the way companies report their non-GAAP information. And there is a concern by some that companies are going to start kind of assuming away COVID-19 and say that this is not part of our core earnings, so therefore you should ignore it and treat it kind of as a one-off event. But I think this is different from other one-off events because it can have some severe, pervasive implications for the company going forward, because it could change business models, it could change the way they make money and their cost structure. So that's going to be something I think that that investors and analysts should really take a really close look at, because remember, they're not audited either. So it's going to be important to make sure that they do are able to trust that information. And then the last thing I want to point out, since I do work at PwC, is that the auditor's report will have some really good information, and people should take a look at that. The key audit matters section should have a description around how the auditor got comfortable with some of the long-term projections, with some of the business implications that COVID-19 is having. The going concern opinion is going to be really important, given that some companies won't survive the next 12 months. Some companies will be able to carry on for a couple of years and hopefully longer. But the auditor's assessment around going concern is going to be something that I think would be very useful for analysts and investors to look at. So, but I suggest looking at auditors' reports too now more than they normally might have.
Thank you, Hilary. So, given how long you've been working with CFA UK, and in fact you are a member of the board now, what do you see as CFA's role, and how can it help support members and indeed the investment industry at this difficult time?
Yeah, it is a very difficult time. I think the uncertainty that we're all facing is what makes it incredibly difficult, not to mention the health concerns and the personal side of it. So that, I think, makes it different from other crises that we've gone through. One of the benefits of one of the things that the society can do is, bring members together, even virtually, share information. We've got 12,000 members, so we can use power of the membership to be able to bring other people up to speed on how others, some people are dealing with issues, and how others are helping them learn. A few things come to mind with this. I mean, one is that perhaps not right now, but certainly in the next several months, careers advice is going to be really important, and that's one thing that we try to do a lot of within the society, is help our members with managing their careers and also providing information about job opportunities. This could completely change the way we work, and so the way that people look for jobs, the skill sets that are needed, the use of technology. I think there are a lot of changes that are going to come about that will be important, and the society can help members navigate that. The other thing that we are doing at the moment as part of the professional steering committee, but also working alongside the ethics committee, is coming up with a series of blogs or videos that can help people that are trying to deal with certain issues. So we know that there are some challenges that some of our committee members are facing, that we thought we can take that experience and share it with other members, so that they can see that, first of all, they're not alone in dealing with these challenges, but give them some ideas on how some of the other members have been addressing them, and hope that they can learn from that.
And I mean, given that CFA UK is all about the spirit of volunteering, how are you finding that experience of volunteerism through social isolation?
It definitely changes things, and I do miss the social aspect of it, the small talk that happens before and after meetings, and that kind of thing. One of the things I've noticed is that when we have meetings now or calls now, more people are joining, because you don't have that, when people are sitting at their desk at home, probably on back-to-back calls like I've been, but you don't have to get up and leave the office to go do something. You don't have to try to find that time. It's in the diary. You just move on to the next thing. So we're finding that there actually there's more participation in the calls and the meetings that since we've been in lockdown. And also the other nice thing about it is, because everybody's on the phone, everybody's able to contribute. And I think, one of the things, my role as chair, is to make sure that everyone does get that opportunity to contribute, even though we can't see and you can't, really raise your hand. And the other nice thing I've noticed too is people are using video a lot more. So we used to, a couple of months ago, we would have, if you joined a call, you would have just joined it by phone. And now people are using a lot more video, so you can see each other and you can kind of read the room better, so to speak. So I think that's been beneficial, because it's showing that there are some efficiencies to doing things by video or phone that we didn't think were possible before.
Anything else from an investor point of view in terms of thinking about governance and indeed engagement going forward?
Yeah, I think one of the big, I mean, clearly COVID-19 is dominating, everything. Companies are trying to deal with it. It's in the press all the time. The markets are going crazy. So it's it's something that's on everybody's minds. So right now, I think it's important to focus on that and how the business is dealing with it. And so if there are, kind of any concerns about whether the company is dealing with it appropriately, I think it's up to um, shareholders, analysts to ask questions and to feel free to challenge management and the board about it. There are other issues that are still really important, like climate change, other social issues, and modern slavery, et cetera, that are going to still be affecting the business, that need to be part of the engagement with the company. But that's something that over the long run needs to get have focus, obviously. But right now, I think companies are just trying to get through today and make sure that they can keep their employees, pay their suppliers, keep their customers, etc. So those are going to be really important areas to focus on now, and then the longer term implications can come again. In terms of engagement, one of the really important ways for companies to engage with their shareholders and vice versa is the AGM, and that's getting a lot of attention. So there's a lot of talk about virtual AGMs or postponing AGMs, and how does that work? And I think one of the things that is really a challenge is that's the opportunity for shareholders to ask questions of the board and the executive team. And so when our company's allowing it to be done real time through a webcast, or are they asking for questions in advance that then they provide a scripted answer to, and with no opportunity to follow up on that? I think the way the companies manage the AGM process and try to get input from their shareholders is going to be quite telling. Some companies are planning to hold another event later in the year, assuming we can come together physically at some point. So that'll be, again, another way to see if companies, another opportunity to ask companies questions and to see about their receptiveness to having that shareholder feedback at this time. But I think it's, what it's coming out with, I think what we're seeing mostly is that this is, not easy. There's a lot to keep on top of. The ramifications of all of this are huge and touch on pretty much everything within a business, probably everything within the investment. So it's important to focus on what really matters to the companies you're invested in, and also to your investment process.